Currency Traders. This is Rob Reinhold. I am going to be flying solo this week. Mr. Sharma is off. Let's jump into it, and wow, what a week we had. In this session, we're going to be going through the previous week. Lots of news, lots of central bank stuff. We're going to break everything down. Then we're going to score everything as it is currently right now. Score the broad markets. We're going to score all of our currencies, and then once we're done with that scoring, what we do is we pair up the strongest versus the weakest and set up our trades for the week.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
Last week, the markets were in free fall, and we said the next major support is going to be right around 4,100. Now, look, we didn't think that was going to hold. We just pointed out this is the next support point, and wow, I think it got to 4,105 and had a big old bounce, and we bounced up every single day of the week, and we closed all the way back up to the 50-day moving average. The equity markets went up 6% this week, which is a huge deal. Now, let's talk about what happened. We heard from the FOMC. I'll talk about that in a second. But when the FOMC was speaking, bond yields were like at 4.9%. They were just up to 5%. And by the end of the week, all the way back down to 4.5%. And the US dollar uptrend has broken. We'll take a look at that on the chart. We also heard from the Bank of Japan. And there was a lot of speculation that they were going to come in and intervene in the market. And when the news came out that they were discussing allowing their bond yields to rise to 1%. Now, years ago, the Bank of Japan, they did sort of like what we did in the U.S. with Operation Twist, basically said, we're not going to let the long end of the yield curve rise above 0%. Then they changed it to 0.25, and then about 6 months ago, they changed it to 0.5, and now they're talking about allowing it to raise to 1%. Now, the initial move was strong yen, but then look, the yen is so far behind, and 1% is so much lower than everyone else in the world. The yen pretty much gave up all of its gains and lost more. So when we take a look at just the calendar, again, we talked about the RBA, we talked about the Fed, we talked about the Bank of Japan. So look, everything was basically a little bit better than the market expected, and the market loved it. Let's go into this week. Let's look at the numbers, and we'll close the books on this week. The S&P was up 6% for the week. Now, look, that is a huge week. I mean, once a year we have this kind of week, and this was the week we got it. Just a huge up week, up 6%. World index up 6%. Cryptos that had been working as a currency of safety, they kind of mellowed out a little bit. Basically flat for the week. Gold that's been getting a little bit of bid to safety, it fell off, and then oil sold off. Oil's doing its own thing right now. Really no rhyme or reason to that. So as you can see here, just a strong up move, risk on move across the board. And if we take a look at this chart, look, I don't really know what to say about this chart because, a lot of things the market, does its thing and goes in an orderly fashion. And sometimes it goes from so deeply oversold. In 5 days, we're now back up to the 50-period moving average. That is a really, really big rally. Now look, one of two things are going to happen. Either this is a huge bear rally, just like we had back here, that's going to lead to a great shorting event, or this was the bottom. And now I know you're saying, Rob, which one is it? I don't know. Look, I'll give you my opinion, but I don't know what it's really going to be. But I've been very clear that October 15th was the end of the seasonally weak period. And I said, look, I think we're going to get a move higher here. But I said it's too early to do anything. We still have to be bearish until we get the charts on our side. And that was the right call because we rolled over. Here we are. I feel the same way that I did October 15th. I don't think we're going, I think that was the bottom. But look, I thought October 3rd was the bottom. I cannot do anything until I get proof from the charts. So what do I need? First thing I need to get is a break above the 50-period moving average. We already got that a little bit. What I really need is I need a run higher, a pullback, and then a new high. That is going to be the absolute, it is time to go net bullish on everything. Until that happens, look, I think we're going to go higher, but look, that's just my opinion. What do the charts say? It says we don't know yet. We need a pullback and the buyers to come in and then make a new swing high. Then we're going to know we have now the proof on our side. So I do think the markets are going to go higher, but you can't go all the way bullish until we get technical confirmation. I think we're going to get that sometime either next week or the week after. I would love to see a pullback for a couple days, a serious pullback that is met with buying to where we run higher. Then I will be ringing the bell that says, okay, that technically says we can now be net bullish. We take a look at what happened in the Forex market. Well, this is a very, very classic risk-on move. Aussie Kiwi up, and yen, dollar, Swiss franc down. Classic move. There's really nothing else to talk about. This is exactly what should have happened. The only currency you can point out, the CAD should have been a little stronger. So the CAD is showing some relative weakness compared to what it should. We then take a look at the rest of the crypto market. This isn't telling us anything. Bitcoin and Ethereum were our favorites. We said these are the ones to be in, and you can see Ethereum did a little bit better. So let's close the book on last week, and let's take a look at where we are right here. So let's take a look at where we are right now. We are above the 20-day moving average. We're at the 50, and the slope hasn't really turned higher yet. Look, this is a zero. And remember, zero doesn't mean it's going nowhere. Zero could simply be a stop from -3 to +3. We don't know that yet. But if we can get up to +1 next week, +2, all of a sudden now I'm going to say, okay, we now have some technical confirmation. As far as right here, right now, we are not there yet. The other two charts I want to take a look at. First is the bond yields. As you can see, the bond yields had a big pullback. We did not break any technicals here. So we held on. You can see there actually was some buying late on Friday that came in to where we closed up above our 50-period moving average on the daily chart on the 10-year bond. However, when we take a look at the dollar index, you can see major break in trend. We broke 50-period moving average. We broke the last two support lines. We now have some confirmation that the dollar is most likely headed lower. So when we stack all this information up, dollar heading lower, bond yields pulling back substantially, stock market bouncing, if it continues to do this, then we should see further risk-on moves into the end of the year because, again, seasonality patterns say that November and December are typically very strong bullish months. Let's take a look at the calendar. On Monday, we've got the RBA coming out. They are expected to raise rates by 0.25%. Again, their inflation came in a little hotter than expected, so expect them to be on the hawkish side. So you can see throughout the rest of the week, we do have lots of central bank speak, but really nothing of any importance. Chinese CPI on Wednesday. Okay, if you're trading Aussie and Kiwi, that might make a difference. But look, this is going to be more of a non-newsweek trading cycle where I think you just trade technically all this week. All right, let's go and score all of our currencies to where we get the strongest and the weakest, and then we will pair them together. Let's take a look at the cryptos first. Now, I said last week I like Bitcoin and Ethereum, and you can see Bitcoin is still at a +3 on a trend score. It is high basing. We are seeing some high basing price action. The strongest things, that's what they do after they have big runs. They have big runs, and then they have bases. Where they don't pull back, they simply pause for a little bit. So look, it's basing right now. I don't think we're close to a breakout. I don't think we're in the right market conditions yet. So for me, Bitcoin, I'm not really interested in that. Bitcoin Cash, definitely not interested in that. That's all the way back down to between the 20 and 50-day moving average. That's a zero. Going to Ethereum, same thing. But I want you to see Ethereum is actually high basing a little bit with an upward slope to it. It's telling you that it's a little bit stronger. So Ethereum now jumps to my favorite cryptocurrency. That doesn't mean I want to buy it yet. I need to wait for the velocity to pick up. But if I'm looking to buy crypto here, it's most likely Ethereum. And looking at Litecoin, it's okay, but it's not my favorite. So it's just in the middle as far as cryptos go. Let's take a look now at Forex. The dollar. The dollar is the story here. The dollar has broken. Now, I think it's a little too late to chase this on Monday, but what I would love to see is I would love to see a bounce that fails. I'm going to be all short over that dollar if it bounces and then fails. So I do like the dollar short. The question is, do I like it the best? And then I come over here to the yen, and I'm like, boy, I like dollar short, but I like yen short even better. This is the same thing last week we talked about. Yen short looks even better. We already have the Bank of Japan out of the way. I think this one is ready to go. I really like this one at the first part of the week. Now look, we just had a 6% jump in equities. We might pull back 1 or 2% for the first part of the week. If that happens, I do not want to be short yen. But after that bounce happens, or after that pullback happens, if the buyers come back in, I think the yen short is the best trade of the entire week. Swiss franc, it was at a +3. Now it's at a -1 from 2 weeks ago. Okay, you can short it. Again, it's not my favorite, but it's definitely on the list of things that you could look to be short. The euro is a good old flat 0 and 0. So when things are a 0 to 0, I say, I'm not interested. I'll come check back in on you a little bit later. The pound also, it is sloping a little bit higher. When we take a look at the trend score, we're sloping a little higher, but it's not anything exciting. I'm not looking to chase after a pound because I have some other currencies I like much better on the long side. The CAD is not one of those currencies. We are low basing here on CAD. I like CAD short. CAD was my favorite short last week. It didn't really go anywhere, but I like the CAD to the short side quite a bit. Is it my favorite short? No. Yen is my favorite short. But the CAD is one of the currencies that I will have on my watch list this week for weakness. What do I like on the long side? Well, we talked about how great Aussie was holding up last week, and it had a great week to the upside. It might pull back, it might base. So I think the very first part of next week, I think you want to wait for pullbacks and bases to work their way through the system. But I like Aussie to the long side quite a bit. And the Kiwi ended up being the best performing currency of last week. It had underperformed quite a bit, but you can see here Friday, big update on Friday. We're only at a +1 on a trend score, but a +3 on velocity score. You can trade Kiwi if you want. I still like the Aussie better. When we take a look at everything stacked up, the strongest trends are Bitcoin, Aussie, and Ethereum. And the weakest trend scores are yen, dollar, and CAD. This is where you want to look for pairing things up. And what's going right here, right now? Well, the Kiwi has the most momentum right now, but again, I like the Aussie best. And on the short side, you can see here yen, Swiss franc, dollar. They're all looking very, very weak at the moment. So we're going to pair these up. We're going to take a look at Aussie and Kiwi against yen and dollar. And that's really going to be where we're going to start the week off looking for potential trades.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
First currency I want to take a look at is Aussie yen. So pairing up my two favorite crosses together, Aussie versus yen, and let's take a look at this on a daily chart. Now you can see that we were stuck in this little area here. Again, we had some resistance here. Get this line straightened out. There we go. So we had a nice breakout. We are hitting up into some resistance here at 97.50. I want to see a pullback. But I want to be a buyer of this pullback. If I go into a 4-minute chart, I would love to see a pullback back to this 96 area. 96. That's a long way away. 97.2 to 96. That's about a 1.3% pullback. If we don't get that, then I want to see a pullback to at least 96.80. So 96.80 is where I'm going to look at my first shot, and all the way down here at 96.20, 96.30 for my second shot. This is not ready to go yet. It is not ready to go yet. I'm going to be waiting on this one quite a bit. And the other one I want to take a look at is we have Kiwi. Kiwi's looking really strong. Let's take a look at this versus dollar. Kiwi versus dollar. Let's take a look at it on a daily chart first. If you see where this thing has come from, we've got a lot of ground to make up. We are right around some overhead resistance here. I would love to see a pullback, maybe all the way down to 59.40, and then a bounce back up from there. I would love to see this thing just cool off a bit. I like this, but not ready yet. As you can see, I'm not really looking to be very active on Sunday, Monday. I want to let things pull back. I expect equities after 6% jump in 1 week to pull back 1% or 2. Let's let that happen. Let's let all the hot currencies cool off. Let's let all the weakest currencies take a breather. But then let's get right back on the horse, because I do think that we are going to see a continued move higher in equities. To wrap this up, the risk on move is likely to continue. Focus on your velocity scores. Only trade the strong long and the weak short. You're going to do much better in your trading like that. Everyone have a great weekend. Goodbye, everybody.